All right, guys, we're going to do a very quick breakdown on the state of Bitcoin and the crypto markets in general to kick off the week. This will be kind of a preview to the more extensive look at some of these metrics that we'll look at on Friday, as usual, on our This Week in Crypto call right here on our YouTube channel. If you haven't done so, don't forget to subscribe and like. You don't want to miss this next stream. That said, we're looking at the past 30 days for Bitcoin, excuse me, and the top 100 market cap assets. Uh, Up here at the top is the price changes, and the size of the box is the relative size of their market cap. It's known as a tree map. You may have seen it plenty of other spaces. We have one here as well, not just for prices, but also for social volume here as well. So you can actually look at how much discussion is being had for Bitcoin or Ethereum or any of these other top 100 assets. You'll notice many of the boxes are too small to actually see visibly the hashtag or cash tag that the asset represents. But if you hover over, you can see the full breakdown of the name of the asset and its cash tag, as well as social volume changes, price, market cap. So, and we'll get to the bar chart in just a moment. So in terms of price change, obviously Bitcoin down 28%, but that's a relatively average number for the top 100 assets. Obviously, in the past month, altcoins have had their share of bumps as well as some rises. And if we looked at this a couple weeks ago, before there was a bit of a rise, it would look a lot worse, and Bitcoin was one of the best performers. But as usual, Bitcoin kind of works as a relative safe haven and does not get hit nearly as much as other altcoins when markets are in a bear format as they are right now, at least for the last 7.5 months. So prices are almost universally down. We still see a fair share, maybe 15 or so of these assets, some of which are stable coins, so they don't count, but 10 or so non-stable coins here are actually up or around even. Social volume wise, down about 9%, which is not the worst thing in the world, to be honest. What really matters, and we'll get to this in a moment, is the volume of discussion related to Bitcoin relative to the rest of altcoins out there. And when Bitcoin is starting to be ignored, or the hottest and latest altcoin is getting a lot of the attention, that's usually a sign of a bit of an inorganic market, because people are seeking the quick pump and dumps rather than the stable, relatively stable. Obviously, Bitcoin is not exactly a stable asset relative to other sectors, but people prefer to go for those fancy new assets that they had never heard of before, but just pumped 30% in a couple hours versus Bitcoin. That's what you don't want to see. And mostly discussion is down, period, over the past 30 days. More and more what we call weak hands are dropping out and deciding enough is enough. I don't want to lose any money. Crypto is a scam. I knew it. I'm getting out of here. And generally, that is what signals the end or close to the end of a bear market historically. Every case is different. If too many people are aware of this phenomenon and see other people dropping out and then get overly confident, sometimes it can last a little longer than you think. But obviously, being about 14 years in now, a little under, Bitcoin is something that has survived every single downfall that it's seen. And it's interesting. We're sitting at just about 20.6K. We got to as low as the 17Ks a couple weeks ago before rising just a little. But if we were to say that the price of Bitcoin is 20.6K back in, say, 2018, we'd be pretty thrilled right now, because that would be a new all-time high. It sort of topped out around 19.6K, I believe, in very late December before correcting. Ethereum ended up hitting its then all-time high in early January, before we went into this long period of dropping. And then we had a little bit of a rise. Then COVID hit. We had an event known as Black Thursday. And then within a couple weeks, we were rapidly recovering, so much so that we got up to above 68K for Bitcoin. And that was the top. historical top, in fact, the all-time high, before it's corrected over the past 7.5 months. And now we're sitting here wondering, what's next? Has enough pain happened where we can start to feel comfortable and at least not losing too much more money? And the answer is, of course, we're not fortune tellers, but we are analysts and mathematicians and data scientists and can confidently play the odds and state when markets are looking more risky than usual or less risky than usual. Obviously, with this kind of downfall, the instinct is to say it's less risky because we've already had a drop. But at the same time, there's a lot of people out there who might say, oh, well, we're in a bear market. That means prices are more prone to keep going down until they don't. Now, myself and a lot of the staff don't personally agree with that notion. Buy low and sell high is generally the consensus and the way we want to trade, but it's easier said than done when we don't know what the low is and what the high is and what kind of time frame we're trading on. And people change their minds all the time. Might go say, I'm going to trade only once a month and only the really massive swings, and then suddenly a 10% swing happens and they go, well, is this the massive one? I'm really not sure. I'm just going to do a little bit here. And then it goes the wrong way for them and they say, all right, I guess I'll do a little more. And before they know it, they're suddenly day trading and swing trading and all these things that they're really not very comfortable with, trying to chase uh, some sort of win, right? And we're trying to help people avoid that and only focus on the fundamentals, the actual health and the state of the markets, showing how bullish and bearish the divergences are at any given time based on utility, other trader pain, social sentiment, uh, whale behavior, things like that. So without further ado, I'm going to jump into a few of our best metrics, and we're going to kind of go rapid fire for a longer explanation of these particular metrics. Make sure to tune in on Fridays, and of course the replays are always available afterwards. We're live if you want to ask questions every Friday at 2 p.m. UTC on youtube.com/c/sentiment network. All right, so we're looking at circulation right now. Generally, we want to see circulation rise over time. No surprise there. More utility means more of a chance for prices to rise. And you'll notice circulation, the 30-day trend, is moving up, but the price is doing that, right? And that's what's known as a bullish divergence. And we even have a model for this. This will be the only metric we look at that actually has an associated model. And it's right here. It's called the NVT analysis model. And it shows just how bearish or bullish the amount of unique tokens moving on the BTC network is relative to wherever the market cap currently sits. And as the market cap has dropped substantially, circulation, as we just checked out, is actually moving up. And it's been moving up since all the way back around late August of 2021, even prior to the all-time high. So that's a great sign. And you'll notice in August, the price was already moving up so fast, going back to around March 2021, that we were seeing these red bars, which intuitively means we're seeing a bearish divergence. But right around October, after the correction began, I know it doesn't, I guess it didn't quite begin yet. So I take that back. It happened in mid-November after the all-time high hit around the 8th to 10th of November. That's when prices started to fall, but you'll notice circulation was really, really churning along. And even though it was flattening out, the price was going so far down that it was creating a kind of a natural bullish divergence just by the fact that it was selling off so fast. And it's continued to do so due to war, constant COVID concerns still, and of course the inflation concerns, interest rate hikes here in the U.S., all sorts of factors have led to prices continuing to drop while circulation has risen. And that's why we're seeing so far in June, and it likely is going to stay this way, a bullish divergence for a second month in a row. And these are the first pure green bars we've seen since November and December of 2017, which I mentioned earlier on this video. So circulation is looking good. Now we're going to kind of zoom through a few of these metrics because I want to keep this brief for the sake of uh, letting the longer explanations happen on Fridays. Daily active addresses is our other big utility metric. It's the amount of unique addresses instead of the amount of unique tokens moved. And more or less, it's moving down right now. We'd like to see that move up just like circulation, but it's really not. It's kind of flat slash slightly down. So slightly bearish there, but very bullish on the circulation end. Next up, MVRV. I'm going to move this to 15% and this one to negative 15%. So when the 30-day MVRV is below this line, that is generally an extreme likely scenario where prices are going to be able to bounce or at least stop dropping. And that's exactly what happened. And it's gradually risen back above this line, still sitting in a pretty bullish situation. Look for another drop if that does happen in MVRV, because that'll signal that it's yet another time to buy, or at least add on to your investment with less risk historically. Not investment advice whatsoever, but historically, it's at least a better argument to buy when things are down than when things are way up, like these MVRV signals above 15%. Weighted sentiment, we see that we are back down into very negative territory. That's generally what we want to see. It's no surprise that when the crowd gets euphoric and excited and spams these emojis all over the place, we don't want to be in crypto as much because that is the prime times when prices correct. And alternatively, when everyone is, we'll go with a sad, we'll pretend that's a sad teddy bear. He doesn't really look that sad, but we're going to pretend he is for a minute. When they look like this hypothetically sad teddy bear, that is actually when bounces most often occur. And yes, this was an exception to the rule here. It fooled many people, including us, because we believe very, very wholeheartedly in weighted sentiment. But due to external factors like FOMC decisions, prices are moving despite people being so negative. Still, that said, we're in a negative territory now, and that is a more good thing for bulls than bad. Supply and exchanges, we are continuing to go down, which is good. We want to see more and more Bitcoin moving into cold wallets and away from exchanges where they are at risk of being sold at any given time. Notice that it has kind of flattened out here over the past 2 weeks or so. So not the most ideal situation, but it is staying down and we can't complain too much as long as we're not seeing a rise like this. Now this is a big one. Bitcoin whales, I'll zoom in a little bit for this one. The 100 to 10,000 tier Bitcoin addresses hold a lot of weight when it comes to the future price of where Bitcoin goes. And it's no surprise to see that as they started selling off in late October, the price has fallen too. And yes, the whole purpose of this being a great leading metric is that it doesn't happen immediately. So you can see a dump like this, but a price rise very short term like this. But eventually their weight is going to be felt because they hold so much, so many of the cards when it comes to the future price directions. And when they're out and the small traders are there holding their bags, they don't have as much ability to hold up the price or even push up the price as a few huge whales who can collectively do it in small numbers, whereas small traders would need hundreds or thousands or tens of thousands of people all at once to do what a handful of whales could do. And as a result, prices move down, and it hasn't really looked much better. Yes, we've had a very, very small rise in supply held over the past couple of days, but this isn't anything to be too excited about yet. We'd need to see something like a 0.2, 0.3% accumulation before we start saying, okay, something may be up here. Looks like they're starting to accumulate again. So far, no dice on that. Exchange flow balance, we saw huge outflow spikes back in mid-June. This coincides with the supply and exchanges going down here, so no surprise there. As long as we're not seeing big inflow spikes like this one, we should feel fairly okay because there's really only one reason that Bitcoin moves to exchanges, and that's for the purpose of potentially selling them. And we don't want to see that. We'd rather Bitcoin stay off cold wallets. So all good here right now. Network realized profit loss, it's more or less come back to neutral. We were seeing these huge negative spikes. This one was historical, one of, if not the biggest in the past decade. If we had all of our data going back to like 2008, 2009, we could actually state definitively whether it was the biggest, but we know it's one of the biggest, definitely top five. And we did have a short-term bounce after that happened, followed by a further drop. But network realized losses continue to accumulate here. And as long as that happens, it's going to point to a higher likelihood of a rise to make up for all of the losses that have been gathering on the BTC network. Development activity, more relevant to altcoins, honestly, than Bitcoin. But we really want to just make sure that Bitcoin isn't suddenly falling off the map in terms of development, preferably a rise over the long term. And if we really briefly go back to 2015, we can see there has been a gradual rise. It really peaked the most in September of 2020, and has fallen a bit since, but really not much. And if we still look at where we were in 2015 compared to now, a lot more GitHub activity on the Bitcoin project compared to others, past years, I should say. All right, back to the 6-month look. Dominance. So this is what I was talking about at the beginning with the screener. Notice how it is very high relative to where it has been throughout the last 6 months or so. It actually had a huge peak here, and notice how this actually happened pretty much on the nose with the local bottom before things bounced. That's a great sign. And after it bounced, everyone started getting interested in altcoins again. So you see the pink line here, the social dominance is falling once again. And that generally can halt bull rallies because we need to keep our eyes on Bitcoin. As of today, we're starting to see a huge spike once again, and this is a good sign. So look for this social dominance to stay up probably above 20% or so, and that'll be a good sign that Bitcoin is being talked about as much as we feel it deserves in order to keep the crypto markets propped up. Age consumed, not much to say. Dormant movement hasn't really been too existent as of late. So until that changes, nothing too exciting. When we do see a big dormant movement like this, though, that can signal a price direction change. And that was pretty much what happened about a day after. Ratio of on-chain transaction volume and profit to loss. You'll notice this huge spike here. This is on a very short time frame, only about an hour into Tuesday at the time of this recording. So expect this to come down. But in terms of the last full days, this is the 1.0 line right about there. So as long as they're below, that means there's more losses happening than profits. But these 3 days, look at how there were 1, 2, 3 days where there were more profits than losses being taken per transaction. And that led to a small local top and then a correction here. So we don't want to see that. We want to keep seeing negative low bars where there's more losses accumulating. It may sound brutal, but that's what you need in order for prices to rise, is a lot of losses from other traders and addresses who are capitulating and jumping out at a loss. Finally, whale transaction count. This can often be a sign of a price reversal when whales get very busy and are making tons of $100,000 plus transactions. But as of late, it's starting to drop back, and it's pretty much back to around the normal range after being extremely active here after the big drop around the 12th and 13th. So this was a lot of buying the dip, but also a lot of moving out and saying, I've had enough, I'm just going to get out while I can. You can see if we compare up here, the 12th and 13th, it was mostly losses. So there could have been even some of these big transactions were basically capitulation spikes. And right now it's back to normal, like I said, but if you start seeing a really big spike, especially while things are flat, that could be a good sign that things are about to heat up again, especially if it coincides with the supply held here and you start to see a rise. So that's a quick rundown on Bitcoin. I don't know how quick that was, but hopefully you got your money's worth. Thanks for tuning in. Really appreciate it if you spread the word about these kinds of videos, and let me know what you think about it. I'm always trying to adjust and make sure that it's the kind of content that you enjoy and find topical to your trading experiences. Take care, guys. Talk soon.